Something cool about Bitcoin. So I was looking around, snooping around, usually with a dollar devaluation. We always hear your hedge is gold. If they start printing money, and if ever that creates inflation, then the refuge value, store value has always been gold. But we didn't have Bitcoin back in 2008. And now there's ongoing debates. Often it comes Bitcoin versus gold. And why are people arguing about that? Maybe it's because they have maybe the similar values or one's threatened by the other. Anyhow, let's look at Bitcoin right now and look at those monthly defined twicks, sellers coming in, poking the bubble. So this was in a bubble mode right here. It was poked, broken here, 20,000. So that intraday, weekly, must have been insane right here. And when you start going hockey stick, almost vertical on the monthly chart, you are in la la land. You don't know how far it's going to go before it explodes, but look at that. Let's look at the distance. Wow, what? 200%? Is that possible? I thought these were percentages. 200% off the zero line. That is from the 12-month moving average. That is how could you get more than 100%? But you're very far off, and you see it right here. Monthly 4,279 was the 12-month moving average, and the high of that candle was 19,891. Very, very far away. So it deflates, price action goes down, 12-month moving average still going up. You could have had here a chance of a continuation move off of that to re-challenge those highs, but no, the deflation continues until we did. Let's do some Fibonacci. No, where is my Fibonacci? No, what? Okay, here, Fibonacci retracement. And from top to bottom, we did or start the bottom here. Yeah, I'm going to use the wick. I'll do it both ways using the highs. Let's say what we've been doing Fibonacci retracement on the daily, and that's a 76% retracement. So the golden one is 61, but after that, we went all the way a little below 78. Next step would have been the full retrace, but right now it's been bouncing back for the past few months. Check this out right here. So this is my imagination. Try to keep an open mind. Bitcoin to zero, it's worth nothing. That's what we often hear. But when you have a monthly red candle close here, refuse to go down, and then you have 3 months in a row going up, you're starting to form a bottom, monthly defined bottom. You have to respect that. You're still below declining 12-month moving average, so the momentum would actually be down to retest of those lows, and then continuation move right down. But until we see a red candle here, right now it's green, and it's a little embryonic, but when we zoom in on the weekly, we'll see that this is actually starting to look like a stage 2 breakout or stage 1. And on the daily, probably starting to turn over. Remember, it always starts turning over on the smaller time frames first. Okay. Nice weekly volume, more than twice the average of the previous 4 weeks. Had another shot here. So it's breaking out off, this is what I call this the embryonic breakout. Below a still declining 30-week moving average, still underperforming the SPX, but you're starting to go up. So now price action is above 30-week moving average. It's still declining, and you're not outperforming the SPX. But stand light when you crossed over of that zero line from negative territory, you found that to be a very bullish omen. What it's not in its favor, once it starts angling upwards, it's all that Ichimoku cloud defined resistance. It's going to have to run through that. And you have some close monthly or weekly defined right here, weekly defined support. It might bounce off that. So the next course of action, which would be healthy, would be actually a bounce off that, go back down, a bounce, go back down, flat, staying above that 30-week moving average. And after that, let that cloud thin out. And when it's ready to go out, you have a longer base, a longer time spent on the weekly. Those sellers, those weak longs, they're out. The ones that are buy and hold forever, that are never going to sell, that are not buying this on margin, that they don't care how it goes, they'll never get a margin call. They're the only ones sticking around, and then you're out of that cloud right there. Hopefully, that's a lot of damage that was here. I don't know if this was enough time to alleviate all that. So we're gonna get bounces along the way, hit monthly defined support, go back down, and maybe eventually just create a bigger pattern. But there is a vacuum here. Get through that support, that resistance, and we could probably ride it all the way to those 14,000 levels. And let me go back on the monthly and remove my scribbles. Oh, remove too many scribbles. Here's my ultimate, my 14,000. So here's the vacuum. Here's what I call a wall. Oh, previous support turn resistance, that initial breakdown. And where's there some more here? So these are probably the levels of congestion. I'm not quite sure about this one. These are the level of congestion. Right here, we could bounce down off the 12-month moving average. And then after that, go up. And that'd be healthier. So we start having a 12-month moving average going upwards, a stronger base. On the weekly, we'd have more and more tests. We'd be out of the Ichimoku cloud. And after that, we'd get a vacuum all the way up here to 14,000. I know we're not there yet. And this is my measured move. So if ever that top pattern, let's say we go up and we start testing that high, and then the 12-month average keeps going up. So this measured move, breakout line to a new imagined pattern would bring me all the way close to those 24,000 levels. Woo! All right. I want to zoom in on the daily and now see what detail I could get. So the first one to turn over, you want to feel like an oracle. Go look on the daily. Look at the health. Outperforming the SPX. You know what? We don't want to outperform the SPX. We want to outperform our competitor, gold. And right now on the daily, outperforming gold above the 50-day moving average, above the 200-day moving average. It's still declining, and kind of see that on the 12-month moving average. It's still going down, but there's no Ichimoku cloud defined support, resistance along the way. You get a nice vacuum here on that daily defined resistance. And this on the daily is a Stan Weinstein breakout. But it's daily, so it's less reliable than the weekly, more noise, less weight. But you definitely see that volume here, typical of a Stan Weinstein triply confirmed breakout above an inclining 30-week average, above a horizontal breakout line, outperforming the SPX. Now our main competitor, gold, expressed in US dollars. So this could consolidate here and hopefully come back down, test that 200-day moving average, maybe sink through, but that's not super healthy. Give us another chance to enter at those breakout levels and then go back up and reach that vacuum here. So embryonic, you build off the daily, but could be a lot of noise. If you see the same symptoms on the weekly, that the 3-week marriage is starting to turn over, you have volume, and you're starting to outperform your competitor, the weight of evidence adds up. The negatives is that Ichimoku cloud defined resistance on the 12-month moving average, the declining 12-month moving average. You don't want to fight that, but that's what happens. A few green candles like that, and technically everything changes. Hopefully you're far enough away from this, and It's good to know just what your targets are. It's not always, to the moon, I can't overcome previous highs. Just know where your support, your resistance is, and they could play along the way. All right, guys. Thanks for watching.